Hello everyone, this is Ross with Market Traders Daily, and this is today's video analysis for February 3rd, 2020. Today we're looking at the NZDUSD, the New Zealand dollar versus the US dollar for today's trade analysis. Looking here at the daily time frame, two different trends really we can recognize on this chart. First, the previous uptrend from the low to the high of the red trend line, that previous uptrend giving us a clue of retracement points within that uptrend. If we look here where the blue oval or wider blue circle is, right around the orange shaded area, we can see historical resistance around that orange zone, which is 0.6440, 0.6430 within that previous uptrend. We look back a little bit further, smaller blue circle, resistance there. The black circle is important as well because that shows us resistance at the pink zone and support at the orange zone. So the black circle is interesting when we take that into context with the current trend, which is the blue trend line on the right hand side. The falling trend, market's been pressuring back down against the previous red trend. And the interesting thing about today and Friday's candle is that we are under the pink zone, 0.6480, 0.6490, the pink shaded area, just like it did back here where the black circle is. So if we take history as a clue, underneath that pink shaded area, we are now looking at resistance into that pink shaded area. Within the downtrend, that means if we're going to go short and sell, that becomes a possible opportunity to trade the breakout of what was support now becoming resistance for the New Zealand dollar. Of course, we could target back down to the orange shaded area just like you could have back at the black circle on the left. The orange shaded area becomes your target, and historical resistance, we know, helps us identify future support. So within the downtrend, under the pink zone, we can target the orange zone, is what history says. So we watch for opportunity. So in this case, the market is just about 64.70 or so at the current moment. It needs to jump up 10 pips or so, 10, 12 pips back to the pink zone, giving us a setup to take a short with lower risk and higher reward. Remember, if you're going to sell something, you actually want to sell it at a higher price rather than the lowest possible price. So selling on a rally back to the pink zone gives us better risk reward. Then we can target back down to the orange zone. At this point, it doesn't seem like there's any good reason to buy the New Zealand dollar. Something else to think about, Fibonacci of the red trend line, taking Fibonacci low to high, puts the 50% retracement level of that trend right at 64.79. That's the bottom of the pink zone. 618, well below the market at 64.14 area. That's between the orange and the blue zone down here. One last thing here on the daily time frame, 100 period simple moving average. That's the green wavy line here on the chart. Take a look at where the market's currently finding support, right there at that 100 period simple moving average. So what we'd actually like to see is for the market to make a little bit of a bump higher, back towards 64.80, 64.90, the pink zone. Risk reward becomes better. Risk right now, stop loss would need to be above the pink zone just in case the market were to change its trajectory and turn around and go back up. So a little bit of a bump back into the pink zone gives us better risk, smaller stop loss, better reward, farther target if we get that bump higher. Take it down to the 4-hour time frame. You can see how the market's just been settled out down here. Remember that daily 100 period moving average sitting into here. But again, it really doesn't change the strategy. If you're going to sell, you prefer to do it at a higher price. Doesn't mean it will go up there. It may not. But I would always prefer to sell something at a higher price than a lower price where we are right now. So a little bit of a bump back to 64.80, 90 with a stop loss above the pink zone just in case it breaks higher. Target back to the orange zone would be the breakout strategy today for the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.